Now let's take a look at what is going on a more longer-term view. Asian stocks are looking for their first weekly decline in 5 weeks, only their second, in fact, since April. Our next guest oversees more than $500 million. His macro hedge fund has beaten 97% of almost 400 global peers. It's returned more than 15% annually over the past 5 years. And that includes this year. A lot of hedge fund managers, of course, missed the rally since March. Chua Hock is his name, Managing Director of Asia Genesis Asset Management. Hock, very good day. Thanks for joining us today.
Good day. Good morning.
Well, very good morning to you. The summer, global slump or not?
No global slump, but high probability we might have seen the high of stock market for the year.
When you say the high for the year, okay, so they're only down from here. How much of a drop might we see, do you think?
Not so much for the month of June, but because this is the half year end and the quarter year end, so I think there will be window dressing efforts. But in the third quarter, I'm bearish on the global stock market for various reasons.
Okay, now as a hedge fund manager, you therefore have multiple options on what you do. I'm guessing you're not overall long in that case. Are you short, or are you simply moving cash to the sidelines and waiting?
I'm starting to put up some short position, especially in the Nikkei stock market. I think levels above 10,000 not wise for investment.
Let's call up a chart of the Nikkei 225, because it's an interesting position at the moment. We have a chart showing the Nikkei 225 and the 20, 50 and 200-day moving averages. As I'm sure you are well aware, it's crossed above all of those averages. It is pretty much resting on the 200-day at the moment. Also, we've seen the shorter-term averages move above the longer-term ones, traditionally a bullish sign. But you're not convinced by that. Why not?
I'm not convinced because the major trend in the Nikkei stock market in the last 25 years have been a down. So usually when technicals cross over for all these major indicators, probably it's a false breakout. There's higher probability to that. If it's a sustained bull market, then these indicators will be valid and to be taken very seriously.
Okay. I mean, that long-term downtrend that you talk about, clearly in the Nikkei 225 has been there ever since the bubble burst at the end of the 80s. It's got to bottom out at some point. I mean, long-term trends, can you judge where the bottom might be?
No, I think we have to play it every 6 months to 1 year at a time. Given that we have rebounded from the low of 6,008 to slightly above 10,000. Percentage-wise, that is a huge percentage for a market like Nikkei, with have a lot of problems of aging population, declining population, and lower corporate profits down the line. I think it calls for prudence.
Okay, at the same time, when we look at the economic data lately, that has suggested, although things are clearly very bad, things have started to improve. When you're a macro strategist, what economic indicators are you finding most useful at the moment?
I think there is no doubt that the economic numbers have rebounded very significantly and strongly from where we were 3 to 6 months ago. But that can be expected given the intensity and the amount of the monetary as well as fiscal stimulus around the world across almost every country. But the issue then we have to ask ourselves, are these measures sustainable? And are we facing a more structural issue? I think basically for US and Western Europe, we are seeing balance sheet recession. It takes many years to get it sorted out. So I think that is an important big picture investors should bear in mind.
Okay, I want to take a look at a currency trade you're recommending at the moment. So that is essentially to go long yen. I think you're really talking about long yen against the sterling. But let me break it down into its constituent parts. Again, economic reports lately have showed Slumps in machine tool orders, industrial output, Tokyo condo sales, GDP. They may have improved a little, but they're all still slumping. A small pickup in consumer confidence. That's about the only bright spot we've seen. Why would you buy the yen at this point?
Okay, I think firstly, Japan has moved out from depression. Those numbers are depression number to mild recession. So I think that is not too bearish for the yen. The other thing is that global markets are correlated. If I'm bearish for stock market, during this phase of market correlationship, the yen should be stronger. And if you look at the last 2 to 3 months, Mrs. Watanabe is back into carry trades. Unfortunately, usually in this kind of market condition, retail investors over time will lose money.
That's really happening. The carry trades, that is the housewife carry trades, as it's often known, are back on.
Yes, they are back on in quite a big way in the last 2 months.
Okay, and that's going to end in tears.
Probably, if history is a good indication of things, you know.
How much strength do you see in the Nikkei? What's your target against the dollar?
For the yen, I'm looking at sometime in the third quarter, an early part of third quarter, we should be testing 90 again. And if my view on Nikkei were to come true, you know, sometime in the third quarter we might retest 8,000 again, then dollar yen could be heading towards the 80 big figure on the strategic, more medium-term basis.
Okay.